Why we're seeing enthusiasm from the market at this point is a step in the right direction. After a tough couple of months where we were going in the wrong direction, we're starting to see progress. So I think that's where the enthusiasm is coming. We were talking about it just before coming on air. Yeah, it's going to look optically good, even if it's a sort of 50% cut, but it's still very high. And we haven't seen the sort of play out in the real economy, really, of the impact of this tariffs. And I think now we're going to have to sort of see the speed of negotiations versus the speed of pain that's going to trickle around on the economic side.
But I mean, as the weeks go by, are you taking comfort from the sense that there is a limit on Trump, whether that's empty shelves or the bond market?
I think exactly those are the two things that are holding him in check. It's not a good look if you have empty shelves. I think he's going to be sensitive to that. It's not a good look if you have volatility on the bond market. That being said, compared to Trump 1.0, his tolerance is a lot higher this time. In terms of what we're looking at going forward, I think it's continued progress. I think that this weekend is a first step, but I think the markets are going to want to see, okay, what's next? And it needs to be sufficiently tangible to continue some of the corrections that we've seen over the last few days.
Does that just kind of leave us range bound then when we're talking about yields?
I think that's fair, right? How we're playing it in our portfolios is that we're keeping a fair amount of flexibility, so that when we see distortions in the market, and probably playing it more on the relative value side of things than sort of outright bets at this point in time, that's what we're looking for. So looking at ranges, looking at distortions between relationships, and trying to play those over time.